I was on mute. Morning. Fed Day. Tomorrow, Bank of England. Tomorrow, GDP, PCE. Did get MBA apps this morning. Down pretty reasonably. Refi's down from 102 to 723. Purchases down from 165 to 158 and change, 159 and change. And the total index down from 264 to 247. That doesn't move rates, but it certainly reacts to rates. Treasuries worse on some maybe possible potential strikes overnight. Sort of a bit fuzzy. Seems like missiles might have been intercepted. 10s are 463, so not awful, but MBS off about 5 or 6 ticks. Some consternation there about the Fed decision. I'd be disappointed if somehow the Fed reacted to the overnight, right? What's the bad timing of, well, last night we had positive news coming out of the Middle East or the night before, and then last night not so much, and all of a sudden we were going to hold and now we were going to hike. I saw some commentary to that extent this morning that somehow what happened overnight might influence the Fed. I certainly hope that they're not that nearsighted, but I don't know, maybe. Overnight, mixed data. Some price data continues to be accommodative. Some hot GDP numbers. Not a heck of a lot to talk about really in the overnight in terms of data. In terms of the markets, a little bit more to talk about. Stocks in Asia mixed. Nikkei and Korea notably down. Korea down another 6%. Is that day over day? They were down 10. I don't know if that was the night before last or before that, but down 10 and down 6 would be pretty interesting for them. Europe mixed and similar here onshore. All indices indicating slightly better, but Dow futures are down about 0.5 point. VIX up, Bitcoin up 64,000. And then with this renewed nonsense in the Middle East, both Brent and crude are up about 5% on the day. And so crude pushing back away from a 70 handle, unfortunately. On a 1 day, we got down to 81, 80-ish, something like that, high 80s, maybe even 81. Yeah, 81.54, maybe on an intraday. So more positive news overnight would have probably saw us breach 80, which would have been nice, but not to be. Gold and other commodities worse on the day. Dollar mixed, and that's about it. Everything else is 2:00. What are we looking for at 2:00? Well, we're certainly not looking for a hike. The consensus is that they are going to hold, right? Odds of a Fed hike. Let's see what the up to the minute Fed futures look like. Fed funds are pricing in a July hike at 29 to 35%. The other 65 to 71, leaving it unchanged. I think it's fair to say that we're not expecting a cut. September expectations for cumulative tightening increase, with futures indicating elevated chances for a move later in the autumn. Let's see. CNBC, if you've looked at that, says he's ready to make decisions without giving a heads up. I mean, that's old news. CME 35% hike. So we've talked about that versus 26 a week ago. That speaks to a little bit of that short-sightedness that I don't love. Yeah, so there you go. It's all about 2:00. Boy, really good. I hope they pause. I think that the data, morning, Steve. I think that the data is such that it merits a hold. I said this the other day. One wonders if a hike is good for rates. Certainly there's going to be a part of the market that wouldn't agree with a hike, and so therefore a hike would. And we've talked about this before, the duplicity of a lot of these decisions and these market moves. So raising rates raises rates, right? But it also theoretically lowers future inflation. And I say theoretically on several different levels. Theoretically, to whatever extent that we have irrational exuberance, and theoretically because only the Fed creates inflation by printing money and creating leverage, not by lowering or raising interest rates. Now, to whatever extent lower rates create some leverage, I don't know. I guess you could do that math. I would rather not, because I don't agree with it. But anyway, I think that what's the most likely outcome is a hold and a hawkish Fed. What I'm going to look for is how tied in they are to oil. Is there any commentary on last week's significant drop in oil prices, or this week's increase, or or whenever it was? I guess Monday there was a decrease, but yesterday there was an increase. Just you wonder how topical they are or they aren't. If you have any questions, post them here. The one thing I'm going to show you here, and is this share screen? Let's see. So if you look at the St. Louis Fed M2 money supply, and I've shown you this before, on a 1 year, this is where we've gone. I alluded to this. I think we've printed about 5.6% in the last year. How do you expect disinflation or deflation? And I think that the preference at a minimum, I think we can deal with disinflation, the slower rate of the increase of prices, slower rate of inflation. Deflation would begin to retrace back to pre-COVID, over here. But if I'm just going to talk out loud here for a second. If we were worried about inflation here, right? What the heck are we doing here? And can somebody explain to me, because I can't figure it out, why we needed to print, call it what, not quite $1.5 trillion, if we've recovered from COVID? I loved this. And this is why we saw disinflation and in some months deflation. But if you look at a 1 year, this is not good, folks. And so, we can look at any indicator we want. But when, end of last year, when I was talking about, hey, I'm concerned about some, Q1 prints of inflation. Well, boy, I might be concerned about some Q4 prints of inflation. We've printed what, 400 billion just since April. I don't get it. And then again, maybe I do get it, right? Which is the duplicity between am I not sharing? Did I unshare improperly? Well, we'll have to deal with that here for, can I do this? There you go. So the duplicity in the consumer, the duplicity in the job holder, the duplicity in our economy. I don't know. I don't love it. I don't love what I see in the near term. I told you to lock yesterday. Hopefully you did. To whatever extent you didn't, well, at this point, you might as well ride out until 2 o'clock unless a rate sheet tells you otherwise. On a 1 day, you might be able to do okay, 6 coupon. I just don't know why you take the risk. I mean, certainly if they look at money supply and they think of things the way I do, and certainly on the surface, it would suggest that they don't. I would hike rates based on what I see there. But then again, I don't know what good hiking rates are going to do, because I don't think that the consumer behavior is such that would indicate that we're worried about that sort of consumer-driven inflation. So I may jump back on it too. I'm going to say probably not. Maybe if something crazy happens, we'll keep you posted here in the chat if we're going to jump back on. Otherwise, thanks for joining live, watching on replay. And remember, bulls and bears make money, pigs get slaughtered. Have a great day, guys.